Welcome to Morningstar. Today I talk to equity analyst Rob Hales about the Dutch paints and coatings company AkzoNobel. Welcome, Rob. Recently AkzoNobel had a big milestone in selling their specialty chemicals division. That was already announced, and so it was expected, but then there was the price. Was it a good price?
Yeah, it was a very good price. It was around 10 billion, works out to about 10.5 times EBITDA. So it's a great price for what we think is mostly a commodity chemicals business, but just reflects the environment. It's a great time to sell right now.
Okay, now that milestone is out of the way, and now AkzoNobel can focus on its core business, paints and coatings. And one of the major tasks for them ahead is cost savings. How are they going to manage that?
Yeah, it's all about cost savings for the next few years. What's interesting about AkzoNobel is how separate the paints division and performance coatings division have been run historically. So you can view this almost as a bit of an internal merger. So we see lots of opportunities to take out costs through rationalizing or consolidating the supply chain. We also think there's lots of opportunities to standardize systems and processes. I'll give you one example. Currently within the paints and coatings business, they are running 37 separate ERP systems. So we still think there's lots of low-hanging fruit here to take out costs.
Now, cost savings is one way to go to improve the profitability, but of course, looking further ahead into the future, there's also growth opportunities. Which regions and which businesses provide the best growth opportunities?
We expect the paints business to lead sales growth over the next couple of years. It should be fairly broad-based across Europe, Asia, and Latin America, but emerging markets will be the driver. Akzo is number one in Latin America, and we're seeing signs of Brazil coming out of a recession there. Akzo is number two in China and across most of Asia. The economy is still strong there. Consumer confidence is very high, so we expect the paint business to do quite well there for the next 1 to 2 years. On the performance coatings side, it's more of a mixed picture. We're optimistic on the powder coatings business. It's ideally positioned to capitalize on a sustainability trend right now, so we expect good growth there. However, the marine and protective coatings business is struggling right now, and we only see a slow, delayed recovery in that business.
Now, AkzoNobel has set itself targets for 2020, and those targets are quite ambitious. And given the short time frame that the company has set itself, you are a bit skeptical about them. Why is that?
Yeah, to be clear, we're skeptical versus Akzo's targets, but not versus the market. To put it in context, we're expecting 270 bips in margin improvement over the next 3 years. Over the last 5 years, AkzoNobel increased its margins 220 bips, and that was an environment of favorable raw material costs, which has changed now. Raw material costs are rising, and currencies are also becoming a headwind. So 270 bips in the current environment is a huge improvement in our opinion, and we're actually probably slightly above consensus on that. But for AkzoNobel, their target is calling for 450 bips of an increase, which is just too ambitious in this environment on such a short timeline.
And to conclude, what is your current fair value estimate on the company share, and what discount does that imply?
Our current fair value estimate is €82, and the shares are trading at about a 5 to 10% discount to that. We think it primarily reflects our slightly more optimistic view on margin improvement versus the market.
Okay, Rob, thank you very much for this interview.
Thank you.